Hello traders and welcome to another video review. Today is Monday, October 6, 2025. Let's take a look at the Forex economic calendar for today. The Forex economic calendar for today is quite light in data releases, so it looks like we are going to have the easy day in terms of the scheduled and pre-programmed data releases, and they are like this. Unemployment rate from Switzerland is scheduled for release at 9 o'clock. 15 minutes later we have a speech from ECB de Guindos. At 10 o'clock we have the speech from ECB Lane. At 10:30 we got S&P Global Construction PMI data from the UK. Retail sales data from the Eurozone is scheduled for release at 11 o'clock. Then we have the Governor Bailey speech at 7:30, and at the end of the day we got the business confidence data from New Zealand. So as you can see, very light day in terms of the data releases. So without any further ado, let's switch to the charts. We start with euro dollar. Euro dollar 4-hour time frame chart is looking bearish yet. Again, there were multiple chances for the bulls to break above the 100 periods moving average. As you can see, around this level here, 1.1755 right now, there is plenty of the rejection candles. One false breakout and then rejection, another rejection here. So there is building bearish pressure on the euro dollar. The dollar might be getting more across the board. Generally might be moving up across the board. So right now the range is still the same as it was before. 1.1779 from the top, 1.1684 from the bottom. So that's the support. The next very interesting technical support is located here at the bottom of the wave C. So right now, as you can see, we don't actually get the movement to the upside. I mean, impulsive movement to the upside, strong movement to the upside. Okay, we got the support. This is like very corrective to me. So it looks like ABC to the downside has not been completed this yet, and this is going to evolve into more complex and time-consuming correction. So ABC first, free wave down, W. This is some kind of a connector. So it looks like this might be some kind of a X wave. So we are waiting for the Z wave to the downside to unfold, and this wave might be any correction imaginable, in a pattern correction imaginable. So it looks like we are going to have a lower level on the euro dollar, but not in a impulsive cycle, but it looks like it is going to be a corrective cycle to the downside. That's the euro dollar. The other major is the British pound, and that's the same situation here. However, this movement from the loss of the wave C looks more bullish and more impulsive than on the euro dollar. So there is still a slight chance here that the market will go above the 100 periods moving average, right now 1.35, and go higher basically towards 1.36, or even the top of for the wave A, which is the 1.3725. However, it looks like in this situation, if the US dollar will be gaining across the board, then obviously the situation here on the British pound, basically on the cable, might be more bearish, because this market will follow the general rule of the gaining US dollar across the board, and the low at 1.3435 might be in danger, and then the loss for the wave C might be tested. Right now we are below the level of 50, 46 points on the RSI, and we are getting closer towards the wave, towards the recent low and technical support at 1.34 basically. So this is the technical support. Obviously, rejection from the 100 periods moving average, another rejection, almost the same situation as the euro dollar, but not that heavy. So what is going on the US dollar versus the Japanese yen? Let's take a look. And this situation here is really different. We have a gap up on the US dollar versus the Japanese yen, mostly linked to the fundamental news. This news might be related to the newest changes in the politics of the US of the Japan. And of course, there were some talks about further stimulus for the economy, the bigger stimulus for the economy of the Japan. So we've made a swing high above the previous wave C high, and this swing high is, for now at least, 150.45. Now we are going to test this level here. Let me just let me mark this on green. Okay. There you go. In case of the further movement to the upside, the next target is 150.88 and 151.22. However, the market conditions are extremely overbought, and the general rule is that this gap to the upside most likely will be filled sooner or later. So please be careful, be focused. Looking at this current chart, because that might be only the temporary gap to the upside. Nevertheless, it's worth to see what exactly the Japanese government is trying to do, especially by following the macro data and remarks and speeches from the Japan officials. US dollar index is somewhere here. USDX, there you go. US dollar index is up, and it's gaping up mostly because of the movement in the US dollar versus the Japanese yen. So we got a slight gap here to the upside. We are on the high, so 98.23. So after ABC movement to the upside and very nice looking test and the breakout of this, let's say, trend line, the black trend line, and 100 pips moving average, we have a gap up. However, the same situation and the same rule applies here. This gap might be covered, might be filled very quickly, so we might see some kind of a spike towards the wave C high, maybe some liquidity taking over 98.80, and then movement to the downside to fill this opening gap. So very interesting setup from the technical point of view at the beginning of the week. We need to talk about the gold, because gold doesn't stop anywhere. Local high 3,939.39. Next target is $4,000 per ounce of gold. So $4,000 per ounce of gold is roughly around I don't know if I will get it to the point. And there you go. Okay, let's say it's a $4,000. That's the target. That's the thick black line. Round number, nice round number. This is where we're going in this bull market. And last but not least, let's talk about the digital gold. We have new all-time high on Bitcoin after breaking above the supply zone. Very nice movement to the upside, breakout above this level here got us new all-time high located at the level of 125,710. Obviously, we got some pullback from the extremely overbought conditions back into the buying zone anyway, because we are still above the level of 60. So it still looks good for the bulls. It's time for the pullback as usual. Nevertheless, please notice that might be the beginning of the last wave to the upside in that cycle, alien wave cycle, and we might see bigger correction later on. Nevertheless, for now, it still looks rather very bullish. The weekly candle, if we take a look at the weekly time frame, looks very impressive. But the same situation was with this candle, for example, right? When we see that candle, right, this is the July 2025 new all-time high again. So what's happened next week was new all-time high, but the red candle, and then we got consolidation, pullback, then a new all-time high, but just temporary, and then another consolidation, another pullback to the downside. So maybe the history will repeat, and then we will see some kind of a movement to the upside. However, please take a look at the end of this trading week how the weekly candle will close. Of course, it's worth to follow the daily candles as well. For now, they are looking very nice. Look at this, almost all of those candles are green. One small red candle inside bar, breakout from the inside bar towards the new all-time high, reversal to the downside should be following right now, especially because on a daily time frame chart the market hits the extremely overbought conditions as well. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. Take care and bye bye.